Hello, and welcome to Let's Talk Tax, the go-to podcast for growth-minded CPAs and real estate professionals in tax. I'm your host, TJ Sponsel. Welcome back to those watching on YouTube and Spotify, and to all others listening in. In today's episode, we're taking a closer look at the manufacturing sector, specifically how firms like Honkamp are helping these clients navigate tax strategies in 2025. Joining me is Keith Habel, a shareholder with Honkamp, to explore what makes manufacturing clients unique, what pain points they're facing today, and the planning opportunities that can make a real impact. From fixed asset strategies and R&D tax credits to state and local incentives, we'll cover real-world examples and discuss how firms like McGuire Sponsel support specialty planning in the space. Whether you're a CPA with a manufacturing clients or a business leader looking ahead to 2026, this episode offers practical insights and proactive advice. Let's dive in. Welcome, Keith.
Thanks for having me, TJ.
And really appreciate you taking time to talk to us today. Just as a kind of a point of reference for all of our listeners, McGuire Sponsel has been serving Honkamp for the better part of over 14 years. I think May 2011 is when I first ventured out to Dubuque, Iowa, and visited everybody and started off to what's now a very great, rewarding relationship for McGuire Sponsel. So I thank you for your time today, and thank you for the confidence that you all have placed in us over the years.
Yeah, no, it's great to be here. We've had a great relationship. I would say it's been beneficial for both sides. We've really enjoyed working with the team there, and so hope for good things to come.
Well, Keith, why don't you give every listeners, why don't you give an overview of Honkamp, just so everybody has understanding. I know you're a very large, successful firm. Why don't you just give everybody that the 10,000 foot view of Honkamp?
Yeah, so we're a firm primarily based in the Midwest. Do have, I think, 8 or 9 offices now, from Dubuque to St. Louis up to Madison. Kind of a Midwest focus there, but we do have clients all over the U.S.
What I would say, over 14 years of working with you all, Keith, is you're a very entrepreneurial firm. You know, you all have invested in different services that fall way outside of traditional tax, accounting, and auditing services over the years. You've been very successful with that. And I think one of the things I really want to focus on today is that given your geographic presence, obviously manufacturing is just a foundational industry with the Midwest. And I really kind of want to focus today on how does Honkamp approach serving its manufacturing clients, and what wrinkles do you need? What wrinkles does a manufacturing client create for a CPA, and what things they have to look out for? So, if you could maybe just kind of give us a quick snapshot of Honkamp's presence in that space, how you've positioned yourself to serve manufacturers of all shapes and sizes.
Yeah, it's a good question, TJ. I feel so it was about 5 or 10 years ago, firm kind of made a decision to say, hey, we really probably should come into some kind of niche areas so that we can kind of have that little bit of a deeper dive, that more extensive knowledge. Um, you know, One of the niche areas that came to fruition pretty quickly was the manufacturing area. So there's about, when we first started the niche area, there's probably about 5 of us that kind of focused in on manufacturing clients. Now I think there's closer to 15 or 20 that kind of specifically try to work with manufacturing. Because as you said, there's a lot of different wrinkles to manufacturing clients, whether it's, just labor shortages or tariffs, different specialty tax credits. There's a lot of opportunity in the space. It's kind of fun to work with those clients because you feel like you can actually try to help make a difference and try to bring some new, entertaining, exciting ideas to them.
What some of the biggest challenges do manufacturers chase? I mean, obviously, you mentioned tariffs. Sitting here in 2025, the impact of tariffs have been huge. But I think when I think of manufacturing, obviously there's a lot of challenges. Whether they're in the commodity industry, the price of goods, obviously cash flow constraints, uncertainty about tax law, making sure the banks are happy with the covenants. Can you kind of give us kind of what you see when you deal with a manufacturer, especially whether it's an existing client or it's a prospective client that's in the manufacturing space? What are some of the quick things that you feel that are kind of consistent pain points for manufacturers?
Yeah, it's a good question. I feel like, right now the hot button is tariffs. With everything that's going on and the different tariffs that are being imposed, especially from, China to even, locally here around Canada and Mexico, although some of those have been paused. There's definitely a large focus on that, and how are we going to try to differentiate and maybe bring some things, more homegrown to try to avoid some of those items. So there's definitely some talks around that. Sometimes it can be difficult to help try to plan around those, but you just kind of need to get your arms around it a little bit. How is it going to affect you? with those, kind of comes into interest rates, right? So interest rates have been higher than they've been in the past. So now we've got some additional carrying costs. So we feel, we've got some clients that, would distribute retail products out. We feel like some of those suppliers aren't taking on some of the inventory that they used to in the past because they don't want to carry some of those additional, interest charges, interest related charges. So that cash flow can become an issue. So we try to help clients, try to project out some cash flow issues so we can maybe help, and then it kind of comes to, hey, we need to talk to the bank a little bit. The bank can say, if we're bumping up against some covenants or things of that nature. So, there's a whole plethora of things out there. Those are kind of some of the big ones that we've seen and we've come across lately. Just trying to, be a little bit helpful and more proactive, trying to think outside of the box a little bit. We always kind of say we're never going to run the business as good as that business owner is. But we've been in the industry, we've seen, different things with different people. Some of them have worked, some of them haven't. So you try to just throw enough ideas out there to try to help somebody. Maybe one of them sticks, maybe they don't, but you're just trying to throw some things out there that are helpful with some of these issues that are coming up.
Obviously, with Honkamp's reach is very broad. You said, obviously, a top 100 firm, hundreds of professionals, and serving in different markets around the Midwest. How do you tweak your approach to dealing with a manufacturer versus another, say, a professional service firm, or obviously maybe a medical practice, or an agricultural a farm operation?
Yeah, so it is interesting. We've developed a team, and so I would say if we're talking to a prospect, one of the things that we've tried to do is we'll try to bring in and do what we've kind of phrased or coined as a tax gap review. So we asked the prospect at that point in time to say, hey, why don't you send us over a couple years of tax returns, business, personal, if it's a flow through, maybe some recent financial reports and some of the reports that were used to put together those tax returns. And then we have a team that comes together and we sit around and we kind of poke holes in that, right? Because there's some fairly consistent messaging when you talk about manufacturers, whether it's discs or R&E credits, whether it's cost segs, fixed assets, incentives, credits, things of that nature. We've identified a few things that are fairly specific to the manufacturing area where we try to have that team come together and say, what are we seeing here? What do we think potentially has been missed? Can we help quantify that? Can we help bring some, ideas to the table to the business owners here that we've, used and experienced with other clients that have been successful that maybe aren't being used at the current time with that person, with that prospect. And even with current clients, we really do try to bring that team together and look at that client every couple of years. Client committee meetings is what we kind of call them, or we kind of coin those, where we bring together 15 or 20 people with vast varieties of knowledge, right? Anywhere from our business valuation area to our SALT team, to maybe some general services partners, some folks that are maybe focused in on the tax area, and kind of gives everybody the ability to take a look at the information that we have related to the client and start asking questions. Whether it's, hey, I noticed the business owner, majority owner is 65 years old and owns 80% of the company. How is he going to, what's the succession planning here? Have we talked to him about that? Is that a concern of theirs? Are they going to die in the chair? Do they have kids? Are we going to sell? Do we need to bring in our M&A team? So I feel like we do try to, make a concerned effort, especially with each of our industries. I'm just focused in on the manufacturing area. But as you kind of alluded to, there's definitely 4 or 5 different things that you think about from a tax strategy standpoint anytime you pick up a manufacturing client or start to look at a prospect in that area.
Keith, I think one of the things that we've experienced together, serving your clients, and I'm obviously working with firms around the country, is that obviously we have a lot of ideas. We have a lot of things that say, hey, we go to a business, whether it's a current client or it's a brand new client, you have a lot of ideas. Helping them prioritize the implementation of these ideas so that can save them money or reduce exposure or help them plan for the future. How do you set the expectations with the client in terms of helping them prioritize? Because we've faced this before. Is that you go in and it's like they're busy making chasing new work, getting work out the door, collecting that work, dealing with payroll issues, or I'm sorry, HR issues, or any other things that come across their desk on a daily basis. how do you sit down with all these meetings, obviously these internal committees and meetings that you all have to prepare to serve your client? How do you inspire them to really to work with you and kind of, I feel it's a Jerry Maguire moment, help me help you. How do
Yeah.
you help set the proper expectations so they can prioritize this so these things can be implemented?
Yeah, that's a great question because as you alluded to, TJ, everybody's really busy right now. New issues pop up all the time, whether it is an HR issue or whether it's the tariff issue, whether it's something else. So, we do try to make a concerted effort to meet with our clients, once to even 3 to 4 times a year, just depending on the need, the size, the desire. We really try to, put together that agenda, right? And we kind of will say, hey, we notice that you don't have an IC disk set up, right? We think that you have some international sales. We can try to help quantify some of this for you. And if that's a high dollar item, we'll put that at the top. And we'll bring in folks like the Sponsel team to say, hey, this is what they're seeing in this industry based upon some of the revenue numbers that you have. And this is the savings that it can have. And I think sometimes if you can enumerate those for clients or prospects, it just makes it a whole lot more exciting, right? If we talk about concepts and ideas and issues, it's kind of like, hey, that grabs my attention, but maybe it doesn't really affect me. Maybe it's going to save me a few $1,000s and it's just not really worth my time. Where if we can come in and say, hey, this is $100,000 savings, that tends to get people's attention a little bit more. So I think it's kind of those things. It's trying to meet with people. It's trying to get in front of them. It's trying to have those conversations. And then I think at the end of the day, and I'm a nerd. I'm a tax accountant. So getting numbers to me is really where it hits the road and really kind of showing that value.
Well, and I completely agree, Keith, is that that's where and so many times I'll be on a call with a brand new or prospective client is that, and it's, I really want to put numbers to concept because some, nature of the R&D credit, for example, we're dealing with a lot of people that are mad scientists and they want to understand the theory, but for the most part, they're business owners and they're busy running their business. And it's like, and so I want to make sure you try to pick up, okay, what's going to inspire them? Once
Mm-hmm.
we have credibility, what's going to inspire them? And ultimately, the dollar savings, is that's ultimately what it is that how much is it going to, number one, how much time does it take? What's it going to mean for me? And how much does it cost? And the
Mm-hmm.
sooner that we can get to that point for them is that, and the most important thing is oftentimes, how much of my time do you need? If it doesn't require a lot of my time and I can lean on Honkamp's team of professionals to handle it, no problem. Send me an engagement letter and let me go on to my next thing.
Yeah. And I agree with you 100%, right? So if we can kind of get to that client or prospect, gain that trust that we actually do know what we're doing and that this isn't just a wild goose chase, we can try to convince them and help them and say, hey, here's the deal. We're looking out for your best interest. If we can do the majority of the work, we're going to do that for you. We're going to try to take that pain off of your plate. And also, I feel like in Sponsel, you guys do an amazing job of this where you say, hey, we've found an opportunity. The opportunity is probably a savings of 15,000 and it's going to cost you 12,000 or 13. Let's just put some processes in place where in the future, if that activity grows, so that potential benefit is 10 times, then you have everything documented and ready to go and it's so much easier to do, but you're not going to chase a dollar for somebody to save $1.10, right? We're looking at, 5, 6x in savings. And the way that McGuire Sponsel goes about and vetting those opportunities out, I think is just it gives a lot of faith in the partner group here at Honkamp to recommend the team, and because we know that you're not going to put anybody in a bad position.
Well, and we really appreciate that, Keith. I really do. Is that I think that's where it's unique about as McGuire Sponsel service offerings have grown. Most of what we have done historically has been savings. We can come and bring
Yeah.
value. Whether it's a cost segregation, an IC disc, you mentioned an R&D study. Well, now that we get into this whole issue of U.S. reporting for international activities, it's compliance, and it's
Yeah.
helping these manufacturers understand that if you're selling goods, if there's goods or services or people moving or money moving across country borders, then you have some exposure, and it's
Hmm.
helping not just it's not always just explaining the benefits to a client. It's also explaining the areas of exposure so we can work together in determining, okay, what is the exposure? What's the client's appetite for it? And what should they do? I think that's really kind of where everybody kind of gets excited about the savings piece of it, but there's also some protections that need to be put in place for clients. And that sometimes can be difficult to work with clients on. How do you all handle when it's not generating benefit, it's straight compliance, reducing the exposure clients face? How do you handle that with manufacturers? Because sometimes they kind of have this gunslinger mentality of, oh, it'll be fine. How do you navigate that?
Yeah, that is a tough one sometimes because when you can bring an idea to somebody and say, "Hey, you pay me 10,000 and I'll get you 100,000 back," that's the no-brainer, right? That's the easy one. People jump on that, without a problem. When you're talking about something where you're saying, "Hey, you need to pay me to put in processes and procedures in place to do some reporting and do some things of this nature," and it's not 100% a benefit to you that you can see right away, that those are more difficult conversations. But I do believe that the most people, when you really sit down and say, here's the risk,
Sure.
right? Let's quantify it. Let's try to look at it. What's the risk? What are we talking about here? And I feel like if we do a good job of trying to explain that to people and business owners and kind of give them an idea of why we think this is a good idea, that a lot of people will get on the board, right? Now, we know, you're a business owner, right? We all know there's a cost benefit analysis here, right?
Sure.
So some people are just going to take that in consideration and say, okay, where's my risk versus where's my reward? I feel like for the most part, when we sit down and actually talk and kind of have those conversations, the business owners will either come to a point in time where they say, yes, we agree with you, or, you know what, I appreciate it. I appreciate you thinking of me, looking out for me, having my best interest at heart. At this point in time, I don't think that risk is that large. So we're going to just pass and hold, but put that on your list to talk to me again in 6 months or a year in case something changes.
I'm gonna put you on the spot here a little bit, Keith, in terms of all that your years of expertise working with manufacturers and various clients. Obviously, we've worked together on cost segregation studies and R&D studies and location advisory work. And what would you say is probably one of the most overlooked when you go and meet with a new client? Let's call it manufacturing. That's today's subject.
Yeah.
What do you find are the couple most overlooked things that they haven't done or their prior CPA has done that Honkamp just looks like a beautiful, bright, shining star after the meeting because you brought these what to Honkamp is a pretty basic concept or strategy. What would you say the top two or three are?
Yeah, that's a good question. I would say, consistently, there's probably three that come to mind. One would be research and experimentation credits, right? Especially in the manufacturing area. One would be cost segregation studies. And then the last one would be the IC disc concept. We
Okay.
actually worked together with Sponsel not that long ago. There was a prospect in manufacturing, nice size manufacturing prospect in Iowa. And I think when we went in, they were interviewing three different firms. We were the smallest of the three firms, so they were working with some larger firms. This is a company that does about 125 to 150 million in revenue, very profitable, very nice client. And we started talking to them. We went through our checklists, kind of had some conversations with them, gathered that information to try to say, hey, what are some ideas that we could bring to the table here? And the biggest one that we thought of that we did not see on their tax return, their information, was an IC disc. And we, sat down, had a conversation with them, and said, are you familiar with the concept? International sales. You take a commission at ordinary deductions, you bring it home at a qualified dividend rate. We're playing this arbitrage rate game, and as long as you're in the top brackets, this works out pretty well. We always do a cost benefit to say, does this really work? And their response was, yeah, we're familiar with it, but we don't sell any product directly internationally. And we said, well, hold on a second. You make product that goes on agriculture equipment, and one of your biggest customers is John Deere. Do you think John Deere ever sends any of these tractors and other equipment over to Brazil or China or anywhere overseas? And they went, well, yeah, we're 95% sure that like about half of our sales to them go overseas. And at that point in time, we said, all right, let's just pause this conversation a little bit. Let's bring in the Sponsel team and let's get some let's quantify this a little bit. Because as you know, but other people might not be aware of, you don't have to directly sell overseas to take advantage of the disc. You can kind of take that pass through And John Deere does a great job of tracking some of that information. And just because Sponsel is so experienced in this area, you guys know exactly what to look for, exactly what questions to ask, and exactly how to quantify that. And we came back and said what you thought was about a $0 benefit turns out to be about a $250,000 a year benefit. And they went, that's not right. We know that's not right. And we said, hey, here's the deal. We'll put our reputation on it. Sponsor will put their reputation on it. We know that this is correct. And it actually took some convincing to tell them that, hey, this is an actual concept that works for you. But they were blown away. I mean, we won the business hands down. And it was it became the easiest sale, right? If you want to call it a sale, win of a new prospect that ever happened to us because of this, concept that is known by some, not by all, but then not understood by everyone to the fullest
Right.
extent either.
Or they think it's some type of tax shelter or some kind of gimmick that's going to create an area. I mean, but
Yeah.
Keith, it's interesting. I think one of the things in all the years we've been working, I'm very proud of the comfort that we have between our two firms. And McGuire Sponsel is so fortunate to serve over 500 CPA firms across the country. And but Honkamp obviously is one of our legacy firms, been there a long time. And there's just such an ease and a seamlessness that exists between our two firms in serving your clients. And I think a lot of that is because of the confidence you placed in us. And we've worked really, really hard to make sure we're supporting you serving your client. But you bring up DISC, and one of my favorite. I've told this story dozens and dozens of times. Is that we were at your Davenport office. I was
Yep.
working with one of your fellow shareholders, and I had to go out to do an R&D meeting. Client is a relatively new client to Honkamp, and there was a conflict in which the client wasn't available and your colleague wasn't. Sorry, the client was available and your partner wasn't available. So I'm out by myself. And I'm walking around the shop floor, and there's literally a pallet shrink wrapped with a big orange label that says Brazil on it. And I jokingly looked at the client. I said, I'm assuming that's not going to Brazil, Indiana, because there is a Brazil, Indiana. And he says, no, it's going to like South America, Brazil. I said, okay, very good. So I kind of cataloged it, and then literally I left the client meeting. I called your one of your partners on her cell, and I said, hey, are you in the office? And she goes, actually, just pulling back in. I said, do you have 15 minutes? And she goes, sure do. So I swung by the Davenport office on my way out of town. And I looked at her and I said, they just told me they're shipping X dollars of product to Brazil this week. And she goes, they are? And she goes, yes. So we got on the phone, literally 25 minutes after I left the client's office, I called and said, don't ship that product out yet. And she and I sat there and explained the concept of a disc. And we had the discs up the next day, Keith. And so literally that entire, just walking around and the confidence you all placed in us, how hard we tried to support you all, literally I beelined it back to your office, walked in, sat in our office, called the client. We had discs up the next day and saved the client a lot of money just on that one shipment that they were shipping out. So discs it's something that talk about, earlier we were talking about the theory versus the numbers. Disc is probably the most complicated strategy to explain to a company because they're like, wait a minute, I got this other entity and I got to move money, but it's owned by the operating entity. And my point is, I think what we endeavor to do is not dumb it down, but to simplify the structure, explain the benefits of it. And so the client goes, why wouldn't I do this? That's the ultimate goal. With any time you talking a new strategy with a client is ultimately, why wouldn't I do this?
Right. Yeah. No, I totally agree. And I think sometimes clients do struggle to understand the technical side. And I'm sure you run across this. Some clients come to you and say, this is legit and you're going to save me money. And you go, yeah. And they go, okay, good, just do it. And some clients are more, I really want to understand it. I want to make sure that, I can be able to explain it to somebody else at a high level too. So you kind of run the gamut on those things, but it is amazing, some of the benefits that can be had. And, like you say, the disc is one of the more difficult to explain to the average just layperson. So, yeah.
You know, it seems like every year, every few years, we deal with this challenge of uncertain tax legislation. And obviously sitting here in the summer of 2025, in the coming weeks, how do you handle advising your clients when there's way more unknowns than there are knowns about tax policy?
Yeah, it's a good question. I mean, that one is really difficult. We try to lean on, some of the resources that we have, whether it's some CCH or, truthfully, even some of the podcasts that McGuire Sponsel has done regarding the big beautiful bill. And we'll even try to brand some of those and just kind of get those out to our clients because it's good information. When you're talking to clients, I think at this point in time, my message is things are going to change. We don't know how, and we don't know by how much. Here are the big provisions that are going to affect you, right? Rates are probably going to stay the same. We hope that the qualified business income deduction stays. Potentially, this capitalization and amortization of R&E credits is going to go away. Um, and some of these bigger things that affects clients, especially in the manufacturing area, and just kind of try to help people understand how it could affect them. The caveat is
Mhm.
always, right now we don't know exactly what's going to happen, so we'll keep you abreast and hope that we have some clarity here in the next 30 to 60 days.
Yeah. No, I agree, Keith. I know this episode will be released here in the coming days, so it's all may change by the time this thing gets released. But I think it is challenging to advise clients on expiring tax provisions because people want to wait. Oh, should I wait to do a cost segregation study until next year? And obviously, I've always taken the belief of a bird in the hand approach, is saying, hey, we do what we know now. And the good thing about the tax bill is, or the big beautiful bill, is that there's some consistency. The areas where they're identical, there's some areas that are not identical. And so I think that's where we're really trying to focus, helping our firms and clients say, hey, okay, we know 174 expensing is highly likely to return for the 25 tax year. That's an area that they both agree on. So we got now the fix on how you handle the prior year's amortization or dollars that weren't amortized. That's another story. But I think it is a constant challenge to advise clients. I think the key thing though is we're having the conversation with them, and we're sitting there saying, hey, exactly your point, we're on top of it, we're monitoring the situation. I think that's what we've done, under Dave McGuire. My partner Dave McGuire, he's very, very proactive in monitoring that stuff. And so even going back to in 2022, in Q4 2022, when it looked like 174 expensing was not going to get fixed, uh, leaking into the January 23, when it became clear that it wasn't going to get fixed, trying to have those conversations proactively with our clients and saying, hey, we're keeping an eye on it. That way, they're not doing their own research. They're not doing their own research because they're not the experts in this. It's our job to keep an eye out. So I think the key thing there is just to let everybody know that, hey, we're keeping an eye on this. And as soon as there's something definitive that we can sit there and build a planning structure around, we're going to bring it to you.
Yeah, yeah, 100%, right? I mean, as you said, TJ, there are, you know, a few provisions that are fairly consistent. And we believe that those are going to come to fruition, right? The QBI is probably going to stick around. As you had mentioned, the 174 expensing, which is going to be a huge deal for manufacturers. I think
Sure.
that is probably going to stay. I always tell people we're 95% sure that this is going to happen. But with Congress
DC.
and the president the way that they are right now, nothing is 100% until it's actually done. So,
I
but you're
completely
right.
agree.
I think being in front of people and just talking to them, answering questions, trying to be a little bit more proactive, which I know McGuire Sponsel does a great job of. I feel like we do a better than average job of as well. I think that's one of the most important things.
What would you say? Maybe we'll each one of us answer this question. What do you think the if you name one thing that is the center point of the success between our two firms working together, what do you think it is?
Oh, I mean, I think between Honkamp and Sponsel working together, it's just trust. I mean, it's 100% trust. I think, I mean, the way that Sponsel comes at a project and the way that we trust that you have everybody's best interest in mind, um, that's just been proven over and over and over again. And I feel like the trust has just been there and it's been there so long. I mean, I never worry about putting any one of your team members on a phone call with a client that I have. And that's probably one of the scariest things that you can do, right? We all protect our clients as much as possible because we're worried about that relationship and maybe getting it, you know, go sideways somehow. But there's been different times I know where I've been in a client meeting or a prospect meeting, and I've just pulled up my cell phone and said, well, let's just call TJ right now. Maybe he's available. And 5 out of 10 times, 8 out of 10 times, you're available and you're like, yeah, hey, what's going on? Tell me a little bit about it. Let's just talk. Have a little
Don't tell my
conversation.
wife that, Keith. Don't tell my wife that. 'Cause I only during the workday, so I might have
Yeah,
to delete this. That's great for clients, but not good for my home life. So,
that's funny.
um, no, I would say, and I really appreciate that, Keith. I really do. I think that one thing that I'm really proud of is that our desire to equip you all with information. Going
Hmm.
out and helping and being that, helping give that technical background, helping you identify the triggers, jumping on a call with the client, with you and the client, explaining the why. Why is
Yeah.
this important? And I think that's where I know that's very intentional on our part. And I know that looking over 14 plus years, that's been invaluable to our relationship to build that trust that you speak of, is our ability to sit down no matter who it is, if it's a staff person all the way up to the senior leadership of the firm, sitting down or coming out to Dubuque or sitting at Davenport or any other office in Madison or St. Louis and having those conversations. Okay, this is the strategy. These are the triggers. This is how we approach your client with it.
Hmm.
And I think that's something that helps build that trust. And that's something that, so I appreciate bringing up trust. And I'm very proud of the relationship, and I'm very appreciative of the relationship.
Yeah, and you're right, TJ. I feel like, and maybe this is the wrong observation, or maybe it's not a correct observation, but I feel like over the last 5 to 7 years, McGuire Sponsel has really put forth a concerned effort to try to provide as much education and information to the firms that you serve, Honkamp included, of upcoming laws, changes, ideas, opportunities, service lines, whether it be credits and incentives or different R&E things, how cost seg is going to change in the next future, whatever that could be potentially. I feel like your firm has done an amazing job of making sure that people are updated with as much information as possible.
Well, I appreciate that. And Keith, I really appreciate your time today. So I know we're all busy. Summer seems like it feels like we don't have any more non-tax season. I mean, not busy. It seems like it's busy year round. And so I really appreciate you taking the time today and recording this with me and sharing the thoughts and the experiences of our two firms have had over the years.
Yeah, no problem. Appreciate the opportunity. It's always great to see you and work together again.
Well, great. Well, enjoy the rest of your summer. Okay.
All right, you as well.
That wraps up today's conversation on tax planning in the manufacturing space. Thank you to Keith and the Honkamp team for sharing their insights and experience. As we heard, manufacturing clients face a distinct set of challenges, but with the right planning and partnerships, there are significant opportunities on the table. Whether it's fixed assets, credits and incentives, inventory strategies, proactive collaboration between CPAs and specialty providers can drive real results. If you'd like to learn more or connect with our team, visit McGuireSponsel.com. Reach out to us directly. And as always, thank you for tuning in to Let's Talk Tax.